Welcome to Dothan Apartment Investor webinar. This is a 262 unit property portfolio located in Dothan, Alabama. We are so glad you took the time to tune into the webinar today. My name is Leander Lima and I will be your host today. First things first, this is a public offering, Reg D 506C syndication that requires to be an accredited investor. It's up to you to make your own due diligence and investigations on the property. Make sure you understand all the documents, the projections before you make your investment decision. But now, let's jump into the fun part. This is the agenda for today's webinar. We're going to be covering the executive summary, key players, property informations, market analysis, business plan, rent analysis, financial analysis, fee disclosure, investment summary, cost segregation, the next steps, and we're going to be ending with the awesome Q&A that you can ask your questions and you'll be talking to us here in the team. There'll be a link down the chat where you can download the Investors Package PDF so you can follow along with us during this webinar. At this time, I would like to recognize our partners and service providers. Thank you so much for being part of the Dothan Portfolio team. My name is Leander Lima and I'm a professional saxophone player, and I had such a successful music career. I toured many countries around the world playing saxophone. My wife Delia and I started a real estate experience in 2016 with a single family rental. Quickly we realized that multifamily would 10x our portfolio and we shift our focus 100%. Now we have over 2,000 units. And we focus only on multifamily. So we found Multifamily Empire, a platform that will help busy professionals like you to grow your wealth through apartment investing. Now, I would like to introduce the Dothan Portfolio sponsor team.
Hello, I'm Tudor Franco. I'm a doctor and anesthesiologist and I live in Maryland, around DC area. I got into real estate about 15 years ago in the single family homes, and then I transitioned rapidly into multifamily a few years ago. We have a great team for this deal, and I want to take the chance of telling you that this is a great opportunity for your investment. Our synergy and dedication to this opportunity is very high, and we hope to bring you the best results in it.
Hi, I'm Delia Kong Lima, one of the co-sponsors. I started investing in real estate in 2016. Prior to that, I graduated from Harvard University and led a successful career as a project manager for a Fortune 200 company. I was responsible for overseeing infrastructure projects totaling $80 million for large hospitals all across the country. Leander and I started our real estate journey in single family after attending one of Brad Sumrock's programs. We look forward to having you as a partner on this project.
Hi, my name is Saket. I'm originally from India and came to the US in 2000. I have an MBA from Columbia University and an engineering degree from IIT India. Started my professional career as a consultant, and most recently I'm at Airbnb in the capacity of chief of staff. My real estate investing journey started in 2003, primarily in a condo. However, over the last few years, I've changed my focus to multifamily. And now this is the only alternative asset class I invest in. Currently, I have over 1,700 units that I own. It started as a tax saving mechanism, but now I'm hooked on the predictable passive cash flow that this asset class generates. I look forward to partnering with you on your multifamily investing journey.
I'm super proud of this sponsor team that came together and made this happen. All right, let's jump into the fun part of this property. What is this property all about? This is 5 properties all next to each other within 5-mile radius. And we have Summer Tree with 72 units. We have Rock Creek with 100 units. The Garden, 28 units. Virginia Terrace, 31 units. Chateau Apartments, 32 units. Combined is 262 units all together. This is a stabilized property with a combined over 95% occupancy rate. Why invest in this portfolio? 1, it's a fantastic location in Alabama. Number 2, high traffic. Number 3, 95% occupied. 4, high growth submarket. Number 5, great value add opportunity. 6, and last and final, a secure investment. Here's the highlight of the investment opportunity. It's a 9% annual cash flow, 100% total return on your investment, and over 110% tax depreciation that you can take advantage for 2021. The minimum investment on this deal is $50,000 for accredited investors only. So now Tudor is gonna cover a little bit about Dothan, Alabama. When we visited the city and more we go there, we fall in love and we're super excited and thrilled that this is gonna be an amazing investment opportunity. Here's Tudor.
So why Dothan? Dothan is one of the Alabama's most progressive cities. The community offers a mild winter climate, affordable housing, low property taxes, and a wide variety of products and services that includes healthcare, education, shopping, and entertainment. The area embraces the best that life has to offer, but also retains the charm and friendliness of the South. The only thing that stands out to almost all newcomers in Dothan is the people. Nowhere you'll find a better community of people who are more friendlier and more caring. These are the top 10 reasons we chose Dothan. Number 1, Alabama is a landlord-friendly state. Dothan MSA has about 150,000 residents, where 41% of them are renters, compared to 31% in Alabama and 36% in the whole United States. Number 2, it is a main transportation and commercial hub for all Southeast Alabama, Southwest Georgia, and Florida, and within 90 minutes driving to Florida Panhandle beaches. Number 3, it is a major retail hub of Southeast Alabama, with retail sales at about $30,000 compared to $13,000 in Alabama and $15,000 in the United States. Number 4, Dothan is one of the 9 small cities with the biggest gain in one-year job growth and housing affordability in 2021, as per Milken Institute. In 2019, Alabama ranked second lowest in the country for property taxes. Number 5, it has a low unemployment rate as of April 2021 of 2.9%, compared to 3.6% in Alabama and 6.1% in the United States. Number 6, has a strong employment base, especially manufacturing with Michelin and Georgia Pacific, healthcare with Southeast Health System, and government with South Nuclear and Fort Rucker, for a total of 40% of Metro's employment, which is a strong, resilient economy that stabilized rapidly after pandemic. Fort Rucker, a U.S. military installation located 25 miles west of Dothan, is a priority within the Dothan community. Fort Rucker is the home of the U.S. Army Aviation and U.S. Army Safety Center that supports a daytime population of about 16,000. Number 7 is a high demand in housing. Nothing was built here in the past 3 years. Number 8, it has the highest traffic highway into the Florida state, a Highway 231, with about 420,000 cars every week. Number 9, has a 14 miles of circle highway around city, similar to a big city beltway, which indicates a strong growth pattern. And number 10, has a medical school built in 2013 to accommodate needs for population expansion. Also, Dothan Regional Airport is a hub for rapid connections to Atlanta. As a fun fact, actually, Dothan is the peanut capital of the world, with a big economic impact for its residents. 50% of the world's peanuts are grown within the 100-mile radius of Dothan. If you're eating a jar of peanut butter, chances are that you're consuming peanuts grown in Dothan area. The National Peanut Festival each fall, it's now a 10-day event with over 200,000 visitors from all over the country, with rides, livestock shows, concerts, derbies, parades, bands that boost the Dothan economy every year. More than just a place to build a better life, Dothan has built-in advantages that also make it better for business. It has a strategic location, easy access, a strong work ethic, a trained workforce, a sound and diversified economy with first-rate educational institution and pro-business tax structure. We believe this is an unmatched opportunity for investors like you to grow your investment and benefit of the tax depreciation that comes with it.
Now let's take a look at the business plan. Our acquisition strategy is built around our ability to add value to an asset. We build our business plan around 3 levers: strong third-party management, value add, and developing curb appeal. With regards to management, we will be retaining the current property management company, Woodruff. They have been managing this property for over 6 years and have done a phenomenal job. With a strong management as a foundation, we will roll out a robust value add and development strategy. We will utilize a 3-pronged approach: upgrade the interiors, enhance the curb appeal, and improve amenities to build a strong community amongst our tenants. Key highlights of our business plan includes upgrade a total of 144 units to premium level, landscape enhancements, exterior paint and carpentry, community-wide Wi-Fi package, building community areas, and incorporating water conservation. Next, rent analysis. Let's review the positive impact on the rents that our business plan will have and why we believe it's achievable. This portfolio has an average effective rent of $680 with an average price per square feet of 72 cents. As it stands, it's the lowest rent per square feet amongst our comparable properties. In fact, it is 22 cents below the comp set average of 94 cents. Our plan, once stabilized, is to push the rent per square feet to 79 cents. As you can see, even then, we stay considerably below the comp set average, a delta of 15 cents to be exact. It is clear we can potentially push the rents further upwards. However, we want to stay conservative and have underwritten such. This gives us the confidence that we can accomplish the plan without introducing much risk. All right, now financial analysis. First things first, we have a lot going for us. This was an off-market acquisition, and we were able to acquire the property well below market price, as we were able to limit the competition. Recent comparable properties have traded at $67,000 to $81,000 per unit. Right off the bat, we have built-in equity. This was possible because of the deep relationship we have with Woodruff, our property management company. Also, we were able to secure a fixed-rate loan with favorable terms. In this market, many assets are being acquired on bridge loan, where the expectation is that the sponsor will refinance or sell the property before the bridge term expires. We all know future rates are unpredictable, and a bridge loan introduces a variable that we, and not just we, any sponsor can't control. By securing a fixed rate, we have minimized any risk that an upward rate movement may cause in future. Let's take a look at the cash flow. There are actually 2 important areas where I would like to bring your attention to: rent growth and exit cap rate. For rent growth, we've actually reduced the CoStar projection by a few basis points. And for exit cap rate, we're increasing the CoStar projections by 13 basis points. Overall, we have used conservative estimates as we want to minimize any risk for our investors.
So let's talk about financing now. We have a very attractive agency loan, Fannie Mae, at 80% leverage of the purchase price. That's the top leverage you can get on a deal. Plus, we have 80% leverage on our rehab plan. Not all loans give you lending or financing on your rehab. The interest rate is fixed at 3.62%, which is subject to a rate lock just prior to closing. Our interest-only period is 2 years, so we won't have any principal payments until the 3rd year. Our exit strategy is to hold the property for 3 to 5 years, at which time we'll reevaluate the market to see when we've hit our projections. Our prepayment penalty is 5 years yield maintenance on a 7-year loan term, so on this deal, we'll be closer to a 5-year hold. Already, we've planned in year 3 to do a supplemental loan upon the increased value of the property, which essentially will cover our principal payments after our interest-only period of the first 2 years. The supplemental plan is actually not included in our underwriting, so this is actually a bonus or icing on the cake.
I would also like to bring your attention to the tax advantages you can get by investing in Dothan Portfolio. We will be utilizing IRS-approved cost segregation methodology to accelerate depreciation losses for our investors. We have worked with a third-party company, and they have provided a conservative estimate of 111% of the invested capital in depreciation losses. What that means is that if you have invested $150,000 in this deal, you will get a depreciation loss of $166,500. Now, this is the point where folks can get excited, and I would like to add a disclaimer that I'm not a CPA and that you should discuss your personal situation with them on how to use the depreciation losses. Additionally, we would not recommend investing solely for depreciation losses. There are side benefits of a great investment such as this one.
Right, so now subscriptions are open, and we are so glad that you took the time and watched this awesome webinar. And this is the opportunity now to invest in Dothan, Alabama. Subscriptions are now open, and go to their portal where there's instructions how can you invest in this portfolio. Now we're gonna take you backstage, and we're gonna go and answer all the questions you might have along with my co-sponsors. It's gonna be amazing, so please type in the chat all your questions, and we're gonna go one by one, and here's the time that we get to interact with you investors. Let's go.